Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to be covering the 4-year cycle from a completely different perspective. I want to explore the idea that instead of the 4-year cycle and topping out on the 4th year, it may well be that this time round, we may top out much before that. So I'm going to have a look at those ideas. I'll also have a look at the pi cycle and the 60-day cycle to ascertain exactly where we are and where we're heading in the next few weeks and months. So if that sounds interesting, then without further ado, get yourself a cup of tea and just relax, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions. So with that out of the way, I'm going to start off with the 4-year cycle and give certainly a different perspective to what everybody expects in this 4-year cycle. And if you follow me on Twitter, you'll know that I was actually warning you that I'm going to be doing this video here about the 4-year cycle and take a hypothetical look into the new all-time high in 2024 rather than in 2025, and it's something that no one is talking about. And as I've said many times, I don't have a crystal ball. I don't even know what I'm going to have for lunch later on, never mind 4-year cycles and predicting something in the future. But all we've got is the charts here and all the data that we can utilize to ascertain the prediction of where the market might go for Bitcoin in the next 4 years. This way, at least we're aware of what possibilities can be, because at the moment, currently, we know that if we followed the 4-year cycle in its entirety, then this really should look like the chart going up until the end of 2025, where we should normally top out based on the previous information, and then we should go into the bear market until the end of 2026, and that would complete the current 4-year cycle. That's the narrative that everybody has at the moment, and I just want to give a slightly alternative narrative to that by presenting this thesis I'm going to give you now. So just to explain exactly where we are with this chart, the red lines are the 4-year cycles here. As you can see, from the beginning, the bottom was over here in October 2010. Obviously the cycles start from the lowest point. So the lowest point at the beginning was here, and then it took 51 months to reach the low point of this cycle. So obviously we topped out here at the top of the 4-year cycle in November 2013, followed by a 1-year bear market, which ended up with a low here after 51 months from the starting point here. And then we went into the next 4-year cycle here, and we topped out here at the end of 2017, followed by another 1-year bear market, and that was the low point after 47 months from this point here. So that was the end of the second cycle, and we've just completed the third cycle, which once again culminated at the top of the bull market here in 2021, and then followed by a 1-year bear market, which we've just completed in November 2022. And from the previous low of 47 months, we've created another low exactly after 47 months over here. So as you can see, roughly, it's a 4-year cycle, and obviously 4 years means 48 months. So what I've done is I put a hypothetical figure here of 48 months for the next cycle end. And these yellow vertical lines here are the midpoints of these cycles. So if you look at this point here, we're at the mid-cycle from this 0 months to 51 months. And if you've been following my 60-day cycle thesis for the last many, many months, you'll know that this cycle here, if you look at the first cycle, the midpoint was over here, at which point we went much higher than the previous high over here and created a right translated cycle, which means that after the midpoint, we reached a higher high from the previous high. So this was a right translated cycle. The second cycle, once again, between the cycle points here, the mid-cycle was here. And once again, we topped out after the midpoint, creating another right translated cycle. And the last cycle that we've just completed, once again, we got the midpoint over here, and the top that we had at 69,000, as well as the one at 64,000, they both completed a higher high from the previous time. So once again, we had a right translated cycle. And those of you with a keen eye will have noticed something, that from the midpoint over here to the top of that cycle, they've been declining, i.e. there's been diminishing returns over the last 12 years. So if we take the candle at the midpoint here to the top of the cycle, it gives us around about 129x. So this was obviously a very steep incline to the top of the cycle. And in the second cycle, from the midpoint over here, we had an increase of around about 25x. So again, less than the previous cycle. And finally, the last cycle we've just completed, we went from the midpoint over here to the 69k over here, just 3x. So there's been a law of diminishing returns in terms of the actual tops after the midpoint of each cycle, which begs the question, are we really going to go much further than the 69,000? Obviously, nobody knows the answer, but based on this trajectory that we've got here, it may be that we only go slightly above the 69,000, i.e. maybe to 100,000. The question is, whatever that top is going to be at 100,000, 120,000, maybe even 69,000, whatever that top is going to be, will it be before the midpoint or after? So it's a question that not many people are asking, because so far we've made 1, 2, 3 right translated cycles. And many people talk about the multi-year bear market that all markets may have to go through. And if that is going to be the case, and we're going through a point where the increases in the Bitcoin price is getting less and less and less each cycle, then if you do have a multi-year bear market, then when we're approaching the bear market, we tend to have left translated cycles. And hence this thesis that if that is going to be the case, it may well be that we're going to have a left translated cycle, i.e. we're going to maybe top out, let's say at about 100,000 here before the midpoint, and then go into the 4-year cycle end and really catch everybody by surprise, because we know that Bitcoin has a habit of shocking people and doing something completely different in each cycle. And the midpoint for the current cycle we're in the 4th cycle now, and this midpoint is actually December 2024. But if you look at the previous cycles, they always top out at the end of the 3rd year of the 4-year cycle, which would have taken us to the end of 2025 over here. So it's something that we should be aware of. So this is the bigger picture view of Bitcoin. Instead of looking at the 5-minute or 1 hour or the 4-hour charts or even the daily charts, if we look at the monthly chart, it's giving us a certain picture, and we must be aware that of these cycles, that we can see that there is a pattern, that these cycles do work. And this 4-year cycle has been integral to how the Bitcoin has behaved over the last 12 years. So it's quite conceivable that if we are going to have multi-year bear markets, then at the midpoint of this current cycle, we may well have topped out, and we must be aware of that. So the main thing is really to be ready for the signs at the top of the market before this midpoint here, because everybody's expectation is that we're going to top out at the end of 2025. And the question then is that what are the signs we need to look at if we are to top out before this midpoint and create a left translated cycle? Now that's a very good question, and I'm glad you asked me that. It's nice to have an intelligent audience asking me very intelligent questions. So here's the answer to that. As we know, the pi cycle has predicted all of the tops over the last 12 years. So since that is what we've got to play with, let's put the pi cycle on and see exactly where the top could possibly be. So in the first cycle up to this point here, the pi cycle crossed over here, and that was our first top, and it also crossed one more time to give us the actual top for the cycle end in the first cycle here. So the pi cycle was actually very accurate in predicting the tops by the crosses of the green and the red line. And remember, the red line is the 111 simple moving average on the daily chart, and the green line is the 350 simple moving average on the daily chart. So what happened in the second cycle was exactly the same. So when the pi cycle crossed was exactly at the same point of the top of that cycle at the end of December 2017, and this is where the cross occurred. And in the last cycle, which we've just ended here, exactly the same thing happened one more time. We topped out at 64,000, and this is exactly where the cross occurred over here. So the cross didn't occur at 69,000 because technically this was the top at 64,000. And this was just the double top to end the bull market for the bear market to take place in 2022. And the question is, where are the pi cycle lines here. As you can see in the previous cycles, when we've bottomed out over here, the red lines start to move up. The green line starts to actually follow, obviously much slower because it's the 350 rather than the 111. And then we're just waiting for these lines to cross. In the second cycle, we crossed over here. And once again, when we had bottomed out, the red line started to move back up and the green line started to follow a little bit later. And we thought that they were going to cross over here, but they managed to actually stay apart and then cross eventually here. So we can see the current cycle is following the same pattern as previously. So we've now got the red line moving back up towards the upside, just like over here after the bottoming, and over here after it had bottomed out, it started to move up. So that's another clue that we've bottomed out at 15,400. I know there are still people throwing the narrative out that we haven't bottomed out, and there are a lot of people, and I mean literally millions and millions and millions of people waiting for this market to come back down below the 15,000 so they can get in. But there are just so many signs that the market has bottomed out, and I've covered that topic many times over the last many videos now. So the red line is now starting to move back up, and soon we'll be seeing the green line start to move up a little bit later as the price moves much higher. So when they cross, that'll be our first sign that we've topped out. And if that happens before the midpoint over here, and that's why we need to be aware of these indicators like the pi cycle, we need to be aware that when they top out, if they actually cross over here, then we know with a high degree of probability that we're going to have a left translated cycle, and that what is going to be followed is going to be a much longer bear market into the next 4-year cycle low at the end of 2026. So that is our first sign that we've got to look at, because up to now the best predictor of the top of each cycle has been the pi cycle top. Another sign that we can look at is how the candlestick patterns form around the tops of that market. So for instance, many people didn't pick this up, and I certainly didn't. On the 3-month chart, what we got at the top of the last cycle at 69,000 was this gravestone doji, or a shooting star that we got. This was your warning that we're going to be coming down into the bear market low over here. So if you see this type of a candle on the larger time frames, and that happens before the halving here, that is a clue that we may well have a left translated cycle. Or if it doesn't happen before this midpoint here and the pi cycle doesn't cross over here, then we know that we're in a right translated cycle one more time, and that's fine by us. That just means that we're more likely to go much higher. So that's another clue of the direction of the travel of the current cycle Bitcoin price. But the main thing is to actually keep our eye on these types of signals and indicators, and to be then able to respond accordingly. The worst thing is being caught out like we were caught out over here with this candle. The main thing is to make sure that we don't expect Bitcoin to actually play to our narrative, the narrative that we have in our own minds, i.e. we've now started the new 4-year cycle, so the market's bound to go up in the next 3 years, and then followed by 1 year of a bear market. We have to really respond to what the market is telling us rather than to what our narrative that we want the market to play out to. For those of you with a keen eye will have picked up on something about the pi cycle and the behavior of the Bitcoin price in between these lines, and it's giving us a clue of what's currently happening now with the Bitcoin price. And the first thing is that in the first cycle, so this is the start, this is the midpoint, and this is the end of the 4-year cycle over here, the actual cycle top was in November 2013 over here. But within this cycle, as I've mentioned many times before, there was a mini cycle, and that is that we topped out here in between the first cycle. And the pattern actually started back here, whereby once we'd had a bear market and had a bottom over here, and the price went up above the red line, the 111 simple moving average, and on here, I'm on the weekly chart by the way, once we crossed over the red line, you can see the price never came back below the bottom over here. So not only did we do that, but the next stop was the green line up here, after which we had a correction to the red line here. So just remember that after the bear market bottom, we go above the red line, and then the next stop is the green line after which we have a correction down here. If we move forward to the actual top over here, so this was the actual bear market. So we had our bear market bottom over here. This was a double bottom, one here and one there. Once we crossed after the bottom, above the red line, once again we went all the way virtually to the top of the green line here, and the next stop was a correction back to the red line down here. So we made our bottom, crossed over the red line, went to the green line and came back to the red line. So that's 2 out of 2. Moving forward to the 2018 cycle over here, we made our top in December 2017, had a bear market, bottomed out. After the bottoming out, we went above the red line, went all the way up to the green line, and we came back to the red line down here. So that's 3 out of 3. So based on just the charts, not my opinion, just the charts only, then what can we expect over here in the current cycle that we're in? Well, here we are. We've topped out at the 69,000. We've bottomed out here at the 15,000, made a double bottom here really, the 17.5 and the 15,400. And just in mid-January this year, we went above the red line over here. So where do you think the stop is going to be based on the historical context and the historical narrative of what's happened to Bitcoin? And I mentioned this before, that our next stop should be at the green line over here. And with a high degree of probability based on the historical context, we should reach this point, which is at currently about $46,000. But obviously, if we move slowly up towards that level over a period of time, then this is going to start turning up, and it could be 48 or 50 or more. Or maybe this time it may wick above it to go up to 50,000. And as we've seen historically, once we get above the red line on the weekly chart of the pi cycle, we don't go and retest the bottom anytime. So those people who are waiting for those things down here, I'm sorry to give the disappointing news that with a very high degree of probability, the chances are we're not going to be doing this anytime soon. Okay, I hope you found value in that analysis, and if you did, then please do remember to like and subscribe if you haven't already done so. I'm going to move on, but before I go into the 60-day cycle, I just want to go through some of the candlestick patterns that are developing on the Bitcoin. And if you've been following me on Twitter, you'll know that I've been talking about this outside bar candle, and I said on one of the Twitter texts that the outside bar candle is still bullying all the following candles. This was the outside bar candle here, and still no close above or below to decide the direction. And if you want to follow me on Twitter, I have a link at the bottom of all of my videos with a Twitter link. And as you can see, the Twitter link is in the description box underneath all of my videos. And if you're interested in the Bitcoin Miners Club, where I cover the Bitcoin miners, which are a leverage play on Bitcoin, then you can join the Bitcoin Miners Club by the link within the description box here, for those of you who've got a handheld device. But below the videos here, there is a join button there as well. And last Wednesday, I did this video for the Bitcoin Miners Club about the exact signal when the miners will shine. And I did a special feature on one of the smaller companies, which I'm expecting to go up by a lot over the next 2 to 3 years. And that company was called Iris Energy. So if you want to catch hold of the details on this video here, then you can join us by clicking the join button below all of my videos and in the description box over here as well. So back to the charts and the outside bar candle over here. If we put the ray at the top of that candle and one at the bottom of the candle, so we can see that this candle is still conducting the affairs of the following candles over here. And we still haven't had a resolution of whether we're going to break above or below, because as you can see, no candle has closed below this and no candle has closed above this. So we're still in limbo as to what this is going to do. The special feature of this candle is that it's an outside bar candle. So you can see that the high and the low of this candle is greater than the high and the low of the previous candle. And at the top of a trend like this, if you get a bearish outside bar candle like this, that usually spells that we're going to come back down. So that is the higher degree of probability. So the bias is to the downside. But if we zoom out of here, we may be able to avoid that. As you can see, this red line is a very powerful line. It goes back all the way to the 17,500 in June 2022. So we found support over here, support once again, resistance, resistance, resistance once again, and resistance over here. And now, in the last few days, we found support one more time on this line here. So we can see that this line is a very powerful support and resistance trend line over here. So we can say safely that this correction that we're having currently, we're down to about 27,800. We should find quite a lot of support at this line, and currently that line is around 26,700. So we could quite easily come back to the 26,700, which would flush out a lot of the other impatient hands, because as soon as there's a little bit of a correction, it takes out literally millions and millions of people out of their positions, because that is what it's designed to do. So we have to understand that the narrative for Bitcoin is to shake people in and out of the market. So when we're coming to the top of the market, people are buying, and when the market is going down, they're selling. And as a result, people losing more and more of their positions. That's just the way it is. And as I've said many times, money moves from impatient hands to patient hands. So if you're patient, you'll be able to ride this out wherever it goes, even if it goes down to the 25,200 level, which is the next level down here, which you'd find very strong support here. I'd be surprised if we break the 25,200. But if it does, then we have to respond accordingly. We must always keep a neutral stance about Bitcoin. We should never become a permanent bear or a permanent bull. We must remain with emotional intelligence to sway between one or the other and be dictated to by the price action and not by the narrative that we want the Bitcoin price to play to. A quick look at the 60-day cycle. So currently we're going into the mid-cycle. The current cycle started back here on the 10th of March, where it bottomed out after 70 days from the previous cycle over here. So this is the midpoint around about the 9th of April. And so far, with this big rally that we've had here, the good thing about it is that we're actually consolidating at a higher level. We're not consolidating at a lower level. So when you look at this big rally here, if you start accumulating in the bottom third, or the middle third, or the higher third, it gives you some information as to what the market wants to do. So we can see quite clearly that after the big run up, we're accumulating in the top third. That means there's a lot of momentum. There's a lot of desperate people that as soon as the market comes down a little bit, they buy it up. You can see with these green candles. So after every red candle, there's a green candle taking it back up again. So these are the desperate buyers who missed out on the bottom over here. They're having to buy at a higher price. And this is exactly what happened over here when we had this big run up to this point here. We were accumulating in the top third. Then once more over here, we were accumulating in the top third. But after this one, we did have a proper flush out down to this level here at around 19.5. But once again, the people who were waiting for the price to come back below the 15,000, they failed to buy over here. Because once the market comes down here, they're expecting the market to go much further. And they got caught out by this rally once more to these levels here. So what we can expect is that if the market is this bullish and the momentum is quite good, we should really see a move into the mid-cycle and create another right translated cycle in this region around 32,000. But there is a spanner in the works, unfortunately. Yesterday in the Twitter page, I actually made everybody aware that this is very rare what's happened on the OBV, this on-balance volume. What we have a double bearish divergence on the on-balance volume here. There's a strong probability for a period of correction unless we create a triple bearish divergence by shooting up to 32,000. So if the price goes to 32,000 and this doesn't make it, then you'll have another triple divergence down here, by which time I would say with a very, very strong degree of probability that we will have a correction from that point onwards. It's just very rare for the price not to respond to a triple bearish divergence. It very rarely happens. In fact, I've only noticed it once in the last 4 years. And it looks like we may make another one. So we've just got to be aware of that. So whilst we're seeing bullish action over here, the on-balance volumes begs to differ. So while we're making bullish noises over here, there are bearish noises in the background with the on-balance volume. Okay, so I'm going to leave it there. There's lots of information that I've given you today. I hope you found value in the video. If you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.